Leigh Martinuzzi here from Martinuzzi Property Group on the Sunshine Coast. Welcome to the first market update for 2026. And honestly, the theme right now is pretty simple. The market is still moving, but it's moving a little more carefully. So let's unpack what's happening and what it means for you. First up, nationally, 2025 was a big year. Home values rose 8.6% across the year, which added roughly over $71,000 to the national median dwelling value. But you could feel things slow down into December. In December, values rose just 0.7%, which was the smallest monthly lift in 5 months. And Sydney and Melbourne actually dipped slightly, down 0.1% each. That doesn't mean the market is crashing, it just tells us confidence is being tested by two things: affordability and interest rate uncertainty. And we're also seeing buyers shift towards the lower and middle price brackets simply because that's where borrowing power stretches further right now. Now here's the part that matters for us. Regional markets are still outperforming the capitals overall. Regional values rose 9.7% across 2025 compared to 8.2% for the combined capitals. And regional Queensland was one of the standouts, up 12.6% for the year. So lifestyle markets like ours continue to benefit from that long-term shift in demand. On the investor side, there's a bit of noise right now. Forecasts are all over the place and investor sentiment is still pretty patchy. But the bigger point is this: a lot of investors don't fail because they bought at the wrong time. They fail because they sell too early. Some data shows around 20% of investors sell within 2 years and around half exit within 5 years. That's usually before the compounding really kicks in. So if you're investing in 2026, the focus should be on buying quality in the right location with strong fundamentals, not waiting for the perfect moment that never arrives. Looking further ahead, there's also growing talk about a widening divide between suburbs. Some markets will do really well over the coming years, others may go sideways, and that's why local knowledge and suburb by suburb research matters more than ever, especially here on the Sunshine Coast, where buyers are comparing a lot of options. Now, on supply, there's actually some positive news. Australia's dwelling approvals jumped to a near 4-year high. In November, approvals rose 15.2% to 18,406 dwellings, and that was about 20% higher than the same time last year. The biggest lift came from higher density housing like apartments and townhouses. Apartment approvals alone surged 63.6% to 5,558, with Queensland leading the way. That's encouraging because we all know supply has been the missing piece for a long time. But one strong month doesn't fix the shortage. We need consistent approvals month after month. So what does all of this mean locally? On the Sunshine Coast, we're still seeing strong lifestyle-driven demand, especially from interstate movers and buyers looking for better value compared to the major capitals. At the same time, quality listings remain limited in many pockets, particularly for well-located family homes. That combination tends to keep prices resilient even when the national conversation starts to sound a bit more cautious. We're also seeing increased interest in low-maintenance living, so higher density options, villas, townhomes, apartments in the right spots. They're becoming a bigger part of the conversation too. So the takeaway this week is simple. The market is still active, it's just more price sensitive. And the best results, whether you're buying, selling, or investing, are coming from good strategy and good local advice. If you'd like a clear idea of what your home is worth right now, or you're thinking of making a move in 2026, reach out anytime. Talk soon.